Hello, good morning. Welcome to Power Breakfast in the Mumbai News Centre. I am Anisha Chin and with me is Mangalam Malu. Well, Mangalam, yesterday the Nifty moved past the 10,900 mark, but it's masking what's beneath the surface because there are a lot of individual stocks that are coming under pressure. Today as well, we have the positive macro in terms of the crude prices coming off. But then all of these stocks like Z, DHFL, etc. refuse to be just out of news.
Absolutely, refuse to be out of news, perhaps for the right reasons if you must, because there are debt concerns, corporate governance concerns. So those are a couple of individual stocks that we'll be watching out for. But completely take your point about the fact that we're, it's a narrow up move that we're seeing. It was Reliance which contributed most to the gains. Ex of Reliance, we perhaps would have closed in the red. That's the case that has been from the start of this year. But all eyes on the RBI policy that is due later this week. Up until then, perhaps we may be in a range. All the time, and then we get cracking on individual stocks. Trade, the Asian markets, they're fairly positive in trade. Very low volumes as major markets in the region that includes Taiwan, South Korea, Hong Kong and Shanghai are shut for the Lunar New Year, the year of the pig if you must. The Japanese index should come up for you. The Japanese index currently trading mildly in the green, and that's despite, or rather it's moved into the red as we speak. That's despite the mild weakening that we've seen on the dollar yen closing in towards the 110 mark. The other indices are shut, so let's get it straight to the SGX Nifty, which for starters indicates a flat start. Remember, as far as yesterday's move was concerned, we recovered about 100 points from the lows of the day, conquered the 10,900 mark yet again. And then for starters, the SGX Nifty indicating a flat start. Let's see how that goes.
Okay, so flattish start is what the SGX Nifty suggests, but on Wall Street, the stocks rose in overnight session led by tech shares. The Dow Jones closed 170 points higher. The S&P 500 also gained around 0.7% at close, and the Nasdaq Composite climbed over 1%, outperforming the other major indices. CNBC's Aditi Roy gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks ending the session higher, the Dow adding 175 points, the S&P up 18, and the Nasdaq higher by 83. Embattled pizza chain Papa John's striking a deal with activist hedge fund Starboard in hopes of ending its feud with founder John Schnattner. Starboard investing $200 million into the struggling pizza chain. Papa John's has been fighting with Schnattner ever since he left the company following controversial language he used on a conference call last year. Shares up 9% today. General Motors has begun another round of layoffs, terminating roughly 4,000 workers in its North American operations. The latest round of cutbacks are part of the restructuring plan GM announced late last year. And corporate buybacks coming under fire in Washington. Senators Chuck Schumer and Bernie Sanders penning an op-ed in the New York Times calling for a limit on corporate stock buybacks. The Democratic senators proposing a measure to stop companies from issuing buybacks unless they first pay workers at least $15 an hour and offer paid time off and health benefits. That's the action from the U.S. market. Back to you in Mumbai.
Okay, so that was about the U.S. markets, but also listen in to what experts have to say about the U.S. economy and the Fed's rate trajectory going forward.
In December, they told us they were going to go twice this year. Nothing I've heard since then tells me they're not going to follow through on that. So that bakes in a 6-month pause. I think what they really need to see is they need to see the yield curve actually steepen up a little bit. So they need to see 10-year yields move higher. And what that means is we need to see some inflation. They saw something in equities they didn't like. Maybe they didn't like the earnings slowdown. Maybe they didn't like the way that was going to filter through. But what will really tell them that they can go is if the shape of the yield curve means that they can hike rates without inverting the yield curve.
We've been seeing housing weak now for a year or so, and it's really started to tail down the last couple months. And so on that, we've seen housing lead the last couple recessions. Housing is a much smaller part of the economy than it was prior to the financial crisis, so we don't think it's going to lead to a recession. But we're expecting Q1 to come in something like 1.5% before picking up later in the year. We think that extra stimulus from both the tax cuts and the extra spending from February and March last year, that will carry over for the first few quarters and boost the economy a little bit.
Right, and across the Atlantic, we had the major European indices. They ended mixed, reacting to a slew of corporate earnings coming in. It was the European banks that did not too well in yesterday's trading session. Something like a Julius Baer fell about 4% on account of missed expectations. As a result of that, we saw some correction in a lot of the Spanish banks as well. The one stock that was in focus was also the one that was in focus in the previous trading session, Wirecard, which fell about 25% in the previous trading session, jumped back about 14% after the company issued a statement saying that all the reports of forgery and financial misinformation are untrue. So some bit of a bounce back seen on Wirecard, but by and large the European markets more or less mixed. Remember, they were reacting ahead of the data coming in from the US and also Alphabet earnings.
Okay, let's shift focus now to the currency space. The dollar has strengthened and is near a 5-year high on back of the solid gains from Friday's job data and the US-China trade talks. The dollar index currently hovering around that 95.8 mark.
In the world of commodities, crude oil prices come off 2-month highs on fresh concerns about a slowdown in the global economy and rising crude supplies. In fact, let's get the crude point forward. Here's some opinion coming in from Edward Morse of Citi on the volatile price moves that we've seen in the crude market amid demand-supply concerns.
There's some tracking of movements on pipelines that are pointing to a potentially big build in Cushing where WTI is priced out. So I think that's why we've seen most of the WTI sell-off, and the sell-off in WTI has dragged down Brent, not quite as much as WTI. We're looking for prices to be rising higher in the 60s as we get through the quarter. We think there's going to be a soft patch, largely because of demand, but there are risks to that soft patch in Q2. Obviously, a lot less demand in May than February. We have plenty of potentially bullish moves in the market. We think a soft patch in the spring, but then we're factoring in all other things else equal, higher prices through the end of the year, with Brent averaging in the mid-60s, probably hitting 70 during that period of time.
Okay, on that note, we'll slip into a short break. Up next, we'll get you all the cues and news you need to know for trade this morning. Stay tuned.